Welcome back to our next market analysis video. Today we are going to examine why the US non-farm payrolls report is one of the most important macroeconomic events for Bitcoin. Rather than looking only at whether employment is strong or weak, we will explore how this report changed market liquidity, influences institutional behavior, and ultimately affects Bitcoin market regimes. This perspective is based on our event intelligence framework, together with findings from our published scientific research. So let's start our analysis with this question: why does Bitcoin care? Many people assume that non-farm payrolls is simply a labor market report. But in reality, financial markets treat it as a signal about the future monetary policy. Employment data influences expectations about Federal Reserve interest rates, and those expectations affect treasury yields, the strength of the US dollar, and ultimately global liquidity. Since institutional investors now represent a much larger share of Bitcoin ownership than in previous years, Bitcoin has become increasingly responsive to these macroeconomic forces. What is the big idea here? At BetaG Dynamics, we don't treat the payroll report as an isolated news event. Instead, we view it as an information shock. New information enters financial markets, investors reassess expectations, liquidity conditions change, institutional portfolios are rebalanced, and the probability of different Bitcoin market regime shifts. In fact, here the key questions isn't whether payroll are good or bad. In fact, the key question is how they change liquidity expectations. But before continue, let's analyze together the research foundations. Our published research support this framework by using DCC gauge and back gauge models. We found evidence consistent with volatility spillover from the US dollar into Bitcoin returns. We also observed that this relationship appears stronger during the recent years, coinciding with increasing institutional participation. This finding suggests that Bitcoin is becoming progressively integrated into the broader market financial system. Let's analyze together the event transmission process. Let's follow the transmission process step by step for this purpose. The payroll reports change expectations about the future Federal Reserve decisions. In the next stage, investors immediately adjust treasury yields, and in the next stage, the US dollar responds, and the global liquidity expectations are then repriced. After that, institutional investors rebalance portfolios in the next levels, and finally Bitcoin reacts as capital flows change across financial markets. And this is the time to analyze together what is the bullish scenario for these events. A bullish outcome for Bitcoin generally occurs when employment data comes in weaker than expected. A market may then anticipate earlier monetary easing. Treasury yields often decline, the dollar may weaken, liquidity conditions improve, and under the BetaG Dynamics framework, this development increases the probability that Bitcoin moves into expansionary market regimes. In the next station, we want to analyze together the bearish scenario, bearish NFP scenario, in fact. The opposite scenario occurs when opposite scenario means bearish scenario. When employment is stronger than expected, markets may expect higher interest rates to remain in place for longer. Treasury yield increase, the US dollar strengthens, liquidity becomes tighter, and this increases the probability that Bitcoin shifts toward defensive compression or even breakdown regime. The next space we want to analyze together the regime assessment matrix. In fact, rather than labeling outcome as simply bullish or bearish. Beta G Dynamics estimates the probability of different market regimes, and very weak employment data tends to favor expansions. A slightly weaker data supports recovery. Results close to expectation offer preserve the existing regimes, and a strong employment increases the likelihood of compression, while exceptionally strong payrolls may increase the probability of defensive breakdown. To conclude, the US non-farm payroll report should be viewed as one of the Bitcoin most important recurring liquidity events. Rather than focusing only on whether the employment numbers are positive or negative, we examine how the information changes monetary expectations, liquidity conditions, and the probability of different Bitcoin market regimes. As a previous analysis, this analyzing of event take place based on the scientific research method that we have in the published with papers with these titles: the US dollar volatilities spillover and competitive effects on Bitcoin return dynamics and mining behaviors. If you find this analysis useful, follow Beta G Dynamics for more research-driven insights into Bitcoin, macroeconomics, and institutional market intelligence. Thank you so much for your attention and watching to this video.